Well, before we went into the break, we asked you a question. A bearish reversal pattern, what does it indicate? And the answer is B. It indicates a stock that is set to fall. And those were the three head and shoulders, double top and triple top formations that we spoke about out there. Now, we've looked at formations that develop over weeks and sometimes even over months. It's time now to look at some short-term trading patterns. That's what our day traders and short-term traders love to look at. And there's one such one, which actually Doc told me is a really popular one, and that's called the long-range bar. Now, this is essentially one where the length of the bar is unusually long. You know, the bar on every trading day indicates the open, high, low, and close of a stock. That's the information you get from a single bar. When it's really long and the range, which is basically the distance between the high and the low of a bar, when that's really long, it indicates a greater level of action in the market. And at significant points in the trend, such patterns take on added significance. Of course, it's most interesting because it's that one single bar that you need to spot, not many days of looking at chart patterns, but that one single bar that can actually tell you a lot. Doc, let's see it on the chart.
Yeah, I think like you said, long range bar is something which I really love because it's very clearly indicative of what the trend status is. First is that long range bars, you know, they actually give you an indication when a trend is about to begin, and they also give you an indication when the trend is about to end. I think there couldn't be something which is much better than that, right? And it does all this job with a single bar. Now, it's a little bit relative, no doubt about it, so hence you have to be a little bit let's say slightly subjective. And let me show it to you on a chart. Now, I have the chart on of Kane India, and I have marked out here certain bars which are relatively longer than the recent set of bars, and that's how you actually spot a long range bar, right? It's longer than the recent set of bars. So what you notice here is you have a decline and the rise starts with a long range bar. You have another decline and that rise is terminated and the next rise starts with a long range bar. Again the same thing, there is a rise, there is a reaction here, and a long range bar sets off the next rise. Then there is a sideways consolidation, one more long range bar, and then so on it goes right up to the top. When you reach the top, then you get a big long range bar on the downside. So here is an initiating long range bar for an uptrend. These are all long range bars which are suggestive of the uptrend which is still in progress, and here is a long range bar which actually ends the whole thing. So like I said, long range bars are extremely useful, whether to know whether the trend is being initiated, whether the trend is going to continue further, or whether the trend is completed. So I think from all these areas, it is one of the most useful of the price patterns.
And it's something that you often see when you're looking at earnings. Sometimes when stocks surprise on the downside, you'll have long bars going down. So once again, it's an indication then not of trying to buy that decline, but maybe of actually expecting a reversal in the trend at that point of time. Okay, so we've seen a daily chart pattern with long range bars. How does it work on weekly patterns as well?
Yes, and it works in exactly the same manner. It really doesn't matter what is the time frame of the chart. The logic of the bar remains the same and the usage of the bar remains the same. I'm here a chart of Colgate in which I have shown you let's say weekly bars, and in the weekly bar chart again I have marked out these long range bars which you can see here. As the trend evolves, you can see that there is a sideways move and then it actually bursts out of that sideways move with a long range bar, then again into a sideways and then another burst, and so on and so forth. Now this is leading up to right into, let's say, July right now, and then you are seeing that there is a sideways consolidation and yet another upward burst. What these set of long range bars on the weekly charts is saying is that Colgate is very firmly in a bullish grip, and those who are looking at it from a longer term perspective, like in the case of investors, they should remain invested and actually can, even if they are a little more aggressive, they can even look to add or enter more in the direction of your long range.
So if you have a tendency sometimes to feel that, oops, it's a long bar moving upwards after a week, and you've been stopped out of that particular stock too early because it's already moved up, that may not necessarily be correct. It might actually be a time to buy into that stock.
You should move back in again. And there is also a tendency when you see prices up here, you will actually think that it's enough now, it's too much, or it's high enough, or I have enough profits. But that's exactly what you should not think. When you get a long range bar which is moving up, especially out of consolidations like this, I think that is the time when you should stay put because the market is willing to give you more.
Okay. All right. Let's look at these chart patterns and see how trades can be initiated with those, because that's where the money is, Doc.
Yeah, you said it. Okay. Now let's look at the head and shoulder pattern, and I will like to highlight it on a stock which is in the news, and it is at the head of the market in any case. We had spoken about this briefly sometime back in our earlier show, but what is evident here in the chart of Infosys is a clear-cut long-term head and shoulder pattern. Look, it's actually taken many weeks, and then there is this nice left shoulder, there is a head here, and there is a right shoulder here, and then you have a neckline which actually joins these two shoulders. This is the last quarter, the results of the last quarter when it actually got slammed down, and then it breaks the neckline. This break actually indicated that longer-term players may be in the process of exiting Infosys. Now see, the interesting thing, and this is a part of every pattern, particularly the head and shoulder pattern, is that you'll always have a pullback to the neckline. And the pullback to the neckline, when we were discussing the failure thing, this was a critical area. If Infosys really wanted to make it, it would have actually gone above this. But came the first quarter results again and it's got slammed down once more. So this is clearly indicating that Infosys, even after the, let's say, June quarter results, people are clearly bearish in it, and this is a stock which is headed lower.
And so if you were putting trade numbers on this trade, what would those be? Short at what level, and book profits at what level?
If you, let's say the first trade was right here when it broke, but then this is in the past. But if you miss this trade, and then you had the entire pattern saying that this chart is actually turning bearish, this pullback and then the subsequent drop, that is where you would actually take your trade. And for the target, you take this height from about 3,500 moving down to about 3,000. So you have a height of something about 500 plus, and you have your neckline at about 3,000. So you subtract about 3,000 minus 500. So you're really looking at about 2,500 rupees as being the target for Infosys.
Okay, just one quick word though, Doc. On the trend line that you see, it's actually cutting above the low of the right shoulder. Why is that?
No, actually the low of the right shoulder is here. This is where the shoulder got formed. This is the brick, see, in the sense you can't be too exact about all this. You need to be a little bit subjective, because when you're dealing with price patterns, you're not really dealing with very specific numbers like in moving averages, etc., which we have discussed earlier. But here you need to be a little bit subjective, where you can really confine. This is the fall from the head, so this is the start of the shoulder, which is why I've actually marked it right across here.
Okay.
I mean, if you had put it here, it would have been a little more horizontal, but then the pattern implications don't change.
Okay, all right then. Well, time for a short break. We'll come back, tell you about an interesting trader profile, about what's going inside the head of some of the star traders up there, not just at Hong Kong and Singapore, but even in London.